Hello, I'm Mark Apsey, Head of Indexing at thematic Research. Here again with a quick look at what happened last week and what we're seeing in the week ahead. So, if you recall last week's video, things got a little shaky. Everyone was worried about what the Fed was going to do. We got kind of a hot inflation print. Things are a lot different this week, right? Um, we had encouraging um, PMI numbers. We looked at gold kind of rolling over a little. Um, the VIX traded off like 20% from its highs, is now around a 15 handle. And generally, I think everybody got a little more comfortable with what they think the Fed is going to be doing going forward. Okay. Now, in terms of sectors and markets, we saw a pretty good snapback, I guess, if you wish, with tech, AI, of course, being the big driver. One of the things that happened this week is that the news started to filter out that Meta Platforms launched their latest large language model, and in doing so, also decided to make it open source. Now, what that means, of course, is that whereas the development of models like GPT-4 and Gemini are all done in-house with their respective companies, Meta is saying, yep, we've done a bunch of work here. Everybody else have at it, see what you can add to the overall program. So depending on your point of view, that could signal that, oh, geez, Meta's throwing in the towel, they're out of ideas. Or, and I think this is where a lot of other people are going as well, is that this speaks to kind of the next stage of development of these models, right? Which is, it's great that you can have a very expert team and come together with these great ideas and great products, but ultimately it's the market which is going to decide what it wants and how best to implement it. So, depending on your point of view, again, you might think like, oh, they're out of ideas, but in reality, I think this is going to open up widely the application for these large language models, because as we know, once something gets out in the wild, uh, there's all kinds of different ways people will figure out to break it, to enhance it, and otherwise make it more useful for themselves. So, with that AI news, not to mention Google announcing its first ever dividend, tech had a big week, right? Let's see here. So, Nasdaq was up about 4.25%. The S&P and the Russell 2000 up about 2.7%, and then the Dow was only up about, call it 70 basis points. Notably lagging on IBM and Intel, kind of holding that index back. Okay. When we look at what was going on also in sectors, we talked about tech already. Big week out of NVIDIA, Apple, Microsoft, AMD. Another name that we've been seeing more and more as a kind of a mover and a mover of markets is the ticker's AVGO. And Broadcom has been making strides this last little while. All right, so these kind of six names that I rattled off, tech was up about 380 bips this week. Those six names accounted for about 3/4 of that overall return, right? The other sector that really ran this week was consumer discretionary, up about 3.6%. A lot of that came from Tesla, right? Tesla was up 14.5% this week. Amazon had a good week. Chipotle actually had a pretty good week. They were up about 11%. And when we look at, everything that's happening there, basically those four names are about 40% of that sector's return as well. Okay. In terms of what we're looking at for this week of names and things to look out for, another pretty big earnings week, right? Lots of bellwethers coming out. Geez. 3M, Coke, McDonald's, CVS is out there. We had Visa last week. We're having MasterCard this week, right? And a lot of the same kind of comments follow into this week, right? We're looking at not only spending, where that's going, but especially on the consumer discretionary and the consumer staples names, um, how much are price increases coming into what their revenues are versus how many units they're moving. Again, with MasterCard, let's see where consumer credit balances are. Let's look at delinquencies and see if we can gauge about the health of the consumer as well. Um, you know, Apple's on Thursday, right? Apple's going on Thursday. So, of course, everyone's going to be looking for that. They've been actually quite aggressive lately, well, in the last year or so. Once they started making their own silicon, we saw the M1 versions of iPads and Airbooks come out, quickly followed by M2 and now M3. Speculation now is that the OLED versions of their iPads and AirPads are going to start coming and shipping with M4 chips. So we'll see what the news is there. We'll see what earnings is like on Thursday. Other names on earnings, of course, F5 and Fortinet. So that's going to give us a clue into cybersecurity spending and what's happening there. Now, when we look at what we also saw last week from a model perspective, again, AI had a big week. The CHIPS Act as well, right? The CHIPS Act and AI. CHIPS Act up about 7.5%, AI up about 8%. Again, a big week for these names. It's not lost on us that on the quarter-to-date period, however, S&P is still down about 3%. Of our models, the only two positive models are nuclear energy and uranium, and of course the market hedge. Okay, so we're happy to see a strong week. We hope that continues, but we're also still aware of the overall quarter, how it's starting, and how April is looking to close out, which is to say that after a long string of months, it actually looks like it may be the beginning of something starting to roll over. And then when we're looking at the macro picture, of course, earlier we had GDP come in softer than what was expected. We also had a slightly hotter CPI print. PMI numbers came in. They were good, still growing, not too aggressively, and they certainly didn't come out soft. This week, so we're looking at housing is coming up, right? And we talked about that last week as well. So we're looking for housing starts and existing. Employment numbers as well coming out, right? And it's interesting because estimates for top line employment are holding steady about 3.8, but we also are seeing the numbers for continuing claims and initial claims continue to creep up a little. All right. I think honestly that's about it. So in a nutshell, on the macro side, we're looking for more PMI figures. Those look to be holding steady. We're looking at some of the employment figures. Those are in the weeds, looking a little softer, but overall the rate is staying the same. That's a U3 rate. And again, we've got a big week in earnings, and we're going to see what's happening, with all those companies. So there you have it, and we'll look forward to catching up with you soon.